Worldwide markets this week, predictions. This week we kick off, as always, with our prediction show. Marc Ashton, Keith McLachlan, and myself will get to that in a minute. We're a little late this week with the release of it. Usually it's Wednesdays. Had some issues early in the week, but we are here. This is Worldwide Markets, episode 661 for 16 January, and we recorded it this Friday lunchtime. Worldwide Markets, powered by Standard Bank Global Markets, Retail, and Shift. The global money app that puts travel, shopping, payments, and investments in the palm of your hand. Enjoy the cheapest Forex rates anytime, anywhere. Shift, powered by Standard Bank. As always, thanks to Shift, thanks to Standard Bank, but let's get to those 2026 predictions. Predictions 2026, our 13th year of doing it, as always. Marc Ashton, Keith McLachlan, myself, Simon Brown. Gents, welcome back for year number 13.
Sure.
Geez, like number 13, how about that?
I got to say, when we sat down all those 13 years ago, I did not expect to still be around. I thought now I would be on the beach somewhere or something. I don't know. But anyway, here we are. So as always, we're going to go back and have a look at what we said last year. Mark ourselves at the moment. The score is 3 to Keith, 4 to Mark, and 4.5 to me. And then we'll do our predictions.
Where did the half come from?
We shared them a few times.
Okay.
And in fact, the one time we split it 3 ways, but I am not doing thirds. So I just gave everyone a half the one time. So actually, we've got more points than we've had years, but that's because I don't do thirds. It's 3 predictions and then top 40 and Rand. And just to be a spoiler, last year we all said the top 40 would be up. Some of us said it might be as much as 15 or 20%.
Sure. We were conservative.
Yeah.
And we all said that the Rand would be stronger. Although, weirdly, a year ago, the Rand had weakened out a whole lot just as we were recording. So it kind of fitted in that. But let's start with Mark. You said Trump and Musk would break up. The Oak called him a pedophile on Twitter. I think you get that. I mean, they were seen having dinner at Mar-a-Lago over Christmas, but he called him a pedophile on Twitter.
And he was out of Doge, so I'm claiming that one.
Yeah, no, that one you can totes have. You said that UK, SA midcap and Brazil would beat the S&P 500. I mean, in dollars, I mean, in ZAR we were up 40-odd%. In dollars we were probably 60 or 70. Brazil about the same. UK, so that was an easy win. And then the weird one, you said that Ripple would do better than Bitcoin.
That was
Ripple
a funny
was
one.
down almost 19%, whereas Bitcoin was down only 4%. So close, but not quite. So you get 2 plus the top 40 in ZAR, you get 4. Keith, your predictions. So your first one was that you said AI premium subs, ChatGPT was too cheap. It was $200. They were going to have to make it $300. They didn't. They're just happy to keep on losing other people's money.
Yeah, that can't last forever. I've got another prediction on AI this year. We'll see how wrong I am again.
It can't last forever. You said the US 10-year above 5%. It looked like it. A lot of folks agreed with you, but it never got there. And then you were going to do the Trump Musk, and instead you pivoted at the last minute. You said Aspen plus Sandox would outperform Eli Lilly and Novo Nordisk. And it is bitter close, but I'm going to give it to you because the theme was there. Aspen saved you a bit towards the end.
I was going to say.
A 29 December cents.
I mean, the generics biosimilars guys are performing the ethicals. And the world is awash with GLP-1 drugs coming to the market. Pricing power just evaporates.
Yeah, and only to get even more so in time. So you managed to get 3 out of the possibility. Mine was gold would be above 3,000, which back last year when gold was 22 seemed like a big number. Again, you lacked ambition. I said local GDP above 2%. We haven't had Q4, but there's no way Q4 is going to give me 2%. Just not going to happen. And I said we would get off the grey list, and for bonus points, we might even get off get an upgrade, and we got both. So I get 2 plus the 2's 4, so it's me and Mark again sharing it.
Sure.
Keith,
well done, guys.
You should have.
Maybe we should go and manage money for a living, sir.
I personally feel like Sam Altman screwed me there.
Yeah. Look, as I said, he's happy to lose somebody else's money. He is not worried about that in the leastest. But yes, so he's.
I feel like I'm one of many he's messed around in the last couple of years.
Yeah. It's actually quite astounding. I mean, I'm playing on Gemini right now, and I'm not even using the paid version. I'm paying for ChatGPT and getting Gemini for free. And at some point, I suppose they're going to rate limit me, but they haven't yet. So yeah, long may it last. But anyway, let's get to 2026 and what we're looking for the year ahead. Mark, we'll kick off with you as on my far left. So 3 predictions. We'll do them one each, and then we'll do Rand and Zara at the end. Mark, what's your first one?
Cool. So I'll preface this by saying, geez, it's hard to make any predictions. The world has gone quite mad. I mean, the Venezuelan president being kidnapped, watch some of these press conferences coming out of the US. We've got local government elections, the head of the police all fighting. We've got, there's plenty going on in the world. And I mean, today we've still got these questions about Iran. We have battleships all over the world. It's very, very exciting. So as we say, we live in interesting times. So I'm going to start off. So, I mean, my preface is I honestly don't know where the world is going this year. But my opening one, and this is my complete outlying one, but I'm going to go with Donald Trump will not be president of the US on the 31st, at midnight on the 31st of December, 2026. And I just think that I get the sense that if you're looking at the political landscape in the US, his popularity ratings are down. The Republicans are pushing back against a lot of the things that he's looking for votes and support for. At the end of the day, I appreciate there's a very contentious discussion around the immigration, etc. But the long and the short of it is that he is creating so much friction internally inside the US on all sorts of levels, whether it is at the political level, and that's with allies and the Democrats, but also just the population in general. It just feels like it is creating tension that it is going to come to a point, and we've never had a president of the free world, if you like, of this nature, and I just don't see it continuing. I don't know how it's going to play out, but I'm going to go with Donald Trump won't be the president of the US on the 31st of December.
I mean, then we get J.D. Vance. I don't know if that's better or worse. We'll find out, I suppose.
We'll find out.
I keep on reminding us he's 79 and obese, but he also has the best healthcare in the world. So,
yeah.
Okay, I like that. That ballsy out the gate, no playing around. Like Trump out by end of December. Forget being called a pedophile. We're ratcheting that one up. Keith, your first one.
So going along with what Mark said, but my call is a bit different. And Mark, you did a good job of outlining what a chaotic, risky and volatile world we're in. Something I'll add in that's underappreciated because bonds tend to put people to sleep, but 1/3 of US national debt matures this year. It was issued in the 3 to 5 year paper at about 1 to 1.5, maybe 2% during COVID, and that matures this year. And suddenly they need to roll that, refinance that. Late last year, there was a bond auction in America that no one turned up for.
Yeah.
Everyone forgets that, everyone doesn't appreciate quite how big this is. And suddenly Trump attacking the Fed and trying to push interest rates down maybe has nothing to do with looking after people in the street. It has everything to do with trying to manipulate that bond curve down. But anyway, Mark, you did a great job of outlining what a chaotic, volatile, risky, unpredictable world this is. And that volatility is everywhere except in the markets. The VIX last year, since the formation of the VIX, the average VIX, which is the S&P Volatility Index, and for short is the VIX, the average for the VIX is 19 points. Last year averaged 18 points. It actually is below average VIX last year. And this year, so far, the VIX averages 15 points. So my prediction is if you have a look at the VIX, it's complete. The markets are pricing in the honeymoon period, soft landing, whatever cute metaphors and adjectives you want to use for it. But the VIX at 15 times makes absolutely no sense. If we look at the long-running VIX average of 19 times and we add one standard deviation to it, it's 27 times VIX. If we add two standard deviations to it, it's 35 times VIX. My prediction is that somewhere, somehow, sometime this market is something is going to happen, and the market is going to suddenly price in all of this uncertainty, all of this risk, and all of this chaos, and the VIX is going to breach 2 times standard deviation. So that is a VIX above 35 points. Somewhere, sometime this year.
I can't imagine what it's going to have to be because, as you said, I mean, Mark laid out the story. I mean, what now? What is going to spook the market that hasn't yet spooked the market?
I don't know, but it's where you see a disconnect between fundamentals and pricing. Well, pricing eventually has to catch up.
Either Trump invades Greenland, or maybe he just extracts the prime minister of Greenland.
Well, maybe he invades Greenland and Greenland wins.
Okay, that's nasty. I'm reminded when we invaded Lesotho and Lesotho won. Yeah. Okay. So VIX above 35. So my first one, I'm sticking with commodities because I agree it's a crazy world out there. And you know, there's that underpinning to gold. I couldn't find more recent data, but I mean the holdings by central banks over the last 5 years have gone from like 14% of their holdings were gold. Now it was 18 at the end of at some point last year, which is still tiny. That sort of creates a floor. Things aren't settling down. We've got copper running. We've got silver being crazy. Commodities are absolutely on a tear. And I'm going to keep it simple and keep it home, which is that the Resi is again going to be our top index versus the FINI, the Indy, the mid-cap, and the property. And to be clear, I mean, last year it was up about 140. It obliterated everyone. Fun fact, it's up about 14% this year, and we're only on day 16. I mean, it's almost clocking in 1% per day. And I think it can continue. I don't think we're going to do 142%. I didn't think that last year, but I do think that it can beat the banks, it can beat the property stocks, it can beat the industrials, it can beat the mid-caps. There's just that momentum there. At some point, we need to sell it. But for now, I'm hanging on, and I think still the winning ETF.
Well, you go back to the Resi index and was dominated by the global diversifieds, Anglo, Billiton, and those diversifieds were dominated by iron ore. So this used to be, and iron ore was dominated by China, and China's use in it was dominated by the property development part of China. That cycle's fundamentally broken down. And we exited last year with the dominant constituents in the Satrix, in the Resi index being platinum and gold. So this is now a precious metals index.
And it probably, I mean, at some point last year, the gold became 50% of the ETF. That's probably more. And then, of course, PGMs came to party. Probably 2/3 precious metals.
Yeah, certainly over half, maybe as high as 2/3.
Yeah. So anyway, that's my call. Mark, a second one from you.
Cool. So as I really struggled. I kicked a whole lot of things around, but so I'm going to go. It's a little bit obscure. Keith might appreciate this. JSE small cap. RH Borpelo. It is a black-owned healthcare business, and it's been listed for a while now. It's got a couple of listings in Africa. It's actually a really interesting story. They've effectively been looking at the tier 2 and tier 3 medical facilities, the nursing colleges, etc. It came to the JSE a while back. It has definitely not shot the lights out, but it to me represents something that's quite interesting if you're looking at the global healthcare situation, but also in the context of the national health insurance. But I mean, I just looked at this morning. It's highly illiquid. It's not exactly going to. There's a lot of work that needs to be done, and I've asked the question before whether or not it would be delisted, but it at the moment it opened this morning trading at around 80 a share. It is now down about, just let me double check this here. So it's trading at about 1.16 a share. Very, very thin volumes on it. But it's carrying a net asset value of, and I know NAV is not something you get completely obsessed about, but just under $17 a share. It has previously paid a dividend. It's an interesting play in the healthcare space. The guys behind it are very bright. I suspect it's just never going to capture the imagination on the JSE and might ultimately just will be delisted. But I wouldn't be surprised. So my call is that the share price of RHB in 12 months' time will be above £3.50 a share, which means you've basically doubled your money. But I think there's something interesting there. I think it's something nobody really looks at. And this is one of the stories that I've been intrigued by. So I'm going to go with that as my second pick.
Okay, RHB to double over the year. I've actually seen it, but as you point out, liquidity is a pain, but it's in a really, really interesting little business. Yeah, I mean, it's down 38% today on 100 shares, 116, on R1.20 of value.
Yeah.
Yeah, I mean, it seems to be a well-run group with some good assets. I mean, NAV might be somewhat overstated, but even if you have a conservative view on NAV, I mean, it's a massive, massive discount. This feels like a good story, exactly one that Blue Gem could write research on.
There we go, Keith. We set you up for that one.
Catching. Okay, Keith, the second one from you.
Okay, yeah, so I can't shy away from the AI predictions. It's become we did an exercise last year where we pulled out one of the challenges with AI is there isn't a sector that's AI. AI, like for example, Alphabet is in communications, Microsoft is in software, Amazon is in retail, consumer discretionary. There's, the semiconductors are their own sector. There's other ones in the utilities space. So we
don't have a listed AI stock.
No.
Nothing.
No. So, but I took the MSCI World and granularly pulled out every single AI thematic stock and added it up. And you think you're buying a global index, and 36% of it is dominated by AI stocks. So a third of the global stock market is currently dominated by AI-related thematic. One cannot shy away from it. You have to have a view. But looking at the hyperscalers, right at the heart and center of the big spenders, and you go and have a look at their business model. And 10 years ago, these were capital light businesses, high margins, high free cash flows, high cash conversion ratios. They had the luxury of the reason they're called hyperscalers is because they could scale infinitely. It cost no capex to scale. And then AI happens. And once again, this is not a prediction on a bubble or anything like AI. I think AI's utility is here to stay, and it's going to progressively get better over time. I do think that AGI is a pipe dream in the next decade or so for various reasons, but AI is here. Now, these businesses have sunk their teeth into it, and their capex bills have ratcheted up. You go back 3 years ago, and they spent about $150 billion on buying chips, building data centers, plugging in racks, and making themselves able to handle the scale of AI. That was 3 years ago. Then you go back to last year, they spent a little over $400 billion continuing building this out. And this year, the budget is about $450 to $500 billion. These are no longer capital-light businesses. These are the world's most capital-hungry, capital-intensive businesses. And the free cash flow profile has fundamentally changed. They used to have net cash balance sheets. They're shifting into net debt. And don't forget, all of these things that you built, you're now depreciating. They're sitting on your balance sheet, and a depreciation starts to wash through your income statements, where you're trying to ramp up the sales and the monetization part of this really capital-intensive business model. And I think in this rush to be first, there's been some capital misallocation. Some centers have been built that are rubbish. Some depreciation that was perhaps fiddled in the early days has to eventually come out somewhere. And although AI is here to stay, my prediction is in the Mag 7, there's going to be margin pressure. And let me make this a quantitative and easy to measure thing. In the Mag 7, if we compare the net profit margins of the Mag 7, at least two of them will have net profit margins this year lower than last year.
Do we include Tesla in that?
No.
Because if we do, then you've already got one.
Yeah. Let's exclude Tesla. So let's call it the Mag 6. That is AR focused.
No,
because Tesla is really a cheat.
Yeah. Okay.
And don't forget, net margin isn't just the depreciation washing through. It's the suddenly you're not net cash businesses, you're net debt businesses. So there's finance costs starting to appear. And although I think revenue was going to grow fantastically, I think the unit-based economics in this space is going to catch some by surprise.
And I think Meta is first in line for that, perhaps. But cool. Okay, some net margin out of the Mag 6. Sorry, Tesla, you got binned. So mine goes back to, sort of the same sort of theme in terms of AI. I don't think we're going to see the AI, the hyperscalers and the like collapse. I mean, they're making money, etc. But they're dominant as a theme in global indices, developed market indices. I wrote something this morning for Financial Mail around how the expectation for power demand is just wholly too optimistic. In other words, utilities are putting in capacity that probably only 50% of it is needed. We've seen this all over the place where things are just getting ahead of themselves. Because what happens is, 5 companies say we want to build a data center, but only 1 or 2 of you do, but 4 utilities made power for 5 of you. So I worry about global markets. And then, of course, there's Trump and there's the US is 75% of global indices, developed market indices. EMs have lagged forever and a day. And my call is simple. I think we're going to see EMs beat developed markets in 2026. And that hasn't happened in a long time. It happened in patches last year, but it's been a decade, maybe a decade and a half of developed market dominance. And to be clear, it's not even developed market. It's just been US. It's just fundamentally been US dominance. 10 years ago...
And only a small portion of the US.
Well, correct. 10 years ago, it was 60% of MSCI World, and now it's 75. And Mark, to your point, it's a small slice of it, right? So I think EMs are going to beat it, and it's easy to measure. There's the iShares ETFs. We use the world, not all country world, so it's the world, and then we use the EM one. And I think EMs are going to, in dollar, because that's a nice sort of simple currency. Everyone gets hurt by that. Equally, I think EMs are going to beat DMs this year.
I think that's a fair call. It's valuations on your side, momentum, depending on which period you look at, but certainly short-term momentum's on your side. And I think fundamentals, America's doing a lot of damage to their own currency. That benefits emerging markets. So the FX will swing in your favor as well. That's quite a reasonable call.
Yeah, and it is. It's that, and I'm going to pull up the number quick. So we did 42% last year as a market, but in dollars we did 87 because of the dollar. And it's that. It definitely on my side. Yeah. Cool. So that's my second, Mark, a third from you.
Cool. So my third one, it's funny because I was actually going to say a combination of India and China to beat the S&P 500. Being, if we kind of frame the world, I actually have no idea where the world's going. So I decided to walk away from that one. This one will probably get me a little bit of hate mail somewhere along the line.
Dude, you've just killed off Trump. You're getting the hate mail already. Trust me. People are going to accuse you of TDS.
TDS. But it's a company that I enjoyed. I liked the original story. I put a little bit of skin in the game as a listing, but I have my issues. And so the prediction is that in 12 months' time, Altvest will not be a Bitcoin treasury company. It is, for those who don't know it, I mean, Altvest listed on the Cape Town Stock Exchange, it then moved to the JSE. They have always enjoyed exposure way beyond what a business of their size should enjoy or would typically enjoy. But I mean, I've put this question to Warren Wheatley a couple of times.
Well, they do strike me as a company that is looking for a strategy.
Yeah. And I think they've had some good ones. I chatted to Stafford Massey last week on my show around the Bitcoin treasury company and everything. And I kind of get the concept, but I agree. I'm not sure where Outvest and South Africa, or now they call themselves North African Bitcoin Company. I'm not sure where that all kind of fits. Cool. Okay, I like that. No, that's punchy. That's punchy. Lacquer. Hey, you got that in Trump. Dude, your inbox is going to be on fire. Keith, a third from you.
Okay, so mine, I always like to have at least one South African one. And bringing this home, in November 2026, we have the local elections in South Africa. And the GNU is held together. There's regulatory reform moving in the right directions. South Africa is in an infinitely better space with much better prospects than it did, going back a couple of years. Right now, with one dark spot, and the dark spot is Gauteng, and in Gauteng it's Joburg. And my call is really simple. And when you want to understand,
I think the eThekwini and other places are saying, "Hey, what about us?" But I take your point.
Yeah, and like there is no recovery story in South Africa without a Gauteng and Joburg recovery story. Like we're just too big and it's too important. And when it comes to regional politics, in my opinion, one of the best sources for what's going on and what the general sentiment is, talk to your Uber drivers. Lots of people get into Ubers of all walks of life, and they hear all sorts. And these guys are wealths of regional political information of what's really happening. And I think there's going to be a big change in Gauteng, specifically in city of Joburg. And in November 2026, my prediction is that I'm not sure the DA is going to win, but I think when the dust settles, Helen Zille will be the mayor.
Okay. Zille is mayor. Yeah, I mean,
I just needed to occur as a fact. These ones.
Well, no, by the time we're back now, mid-Jan, the election would have been, 5 weeks earlier or so. 10 weeks. And, okay, Zille as mayor.
Yep.
Cool. I don't think they'll get the 50%, but
I don't think
there's a good chance they'll be the biggest party.
Yeah, and I think they'll be able to put together a coalition. We're now getting more practiced at coalition politics. Mm-hmm. And I think Helen Zille is such a pivotal character. I think she will be mayor. I think
and
that'll be 2026. 2027 positive Joburg story or Gauteng story.
And it was 20 years ago when they did the first coalition in Cape Town, if my dates are correct. And Zille was at the heart of that. I mean, if anyone's an expert in coalitions, it's probably her. It's going to be a wild election. I thought the current incumbents can't do it. I saw a poll 3 or 4 months ago, which had, if you take the view that polls have got margin of error, and if you margin of error to the extremes, the ANC and the DA were neck and neck. It was frankly quite staggering. Okay, my third prediction, and it's got some small T's and C's. I think we're going to see some big IPOs next year. Rumors around Anthropic wanting to come to market, OpenAI, SpaceX, and partly because, why not? Markets at all-time highs, absolutely. But also because at some point, what we've seen is IPOs happen a lot later because the investors and the private equity, et cetera, can hang on longer. But at some point, they want their money, right? There's someone who put money into, I don't know, OpenAI when it had a billion rand valuation, and now it's got a 500 billion. And they're like, I want my 500x. So I don't know what the company's going to be, but my prediction is that there will be an IPO this year and it's probably one of those three, but maybe not, that at the end of the first day of trading will have a value of over $1 trillion. We're going to see $1 trillion IPO. Because let's take OpenAI. If they so their last round capital raise was 500 billion. Let's say they get it up to 700. They put some spice, then you get a pop on the day. You're at $1 trillion. I mean,
I think that's an excellent prediction, but I don't think it's the AI guys. I think SpaceX is going to be there.
Well, I do think
because,
SpaceX is
like. I mean, the whole concept of blue sky. Well, there's no bluer sky than literally space.
Well, except in space, the sky is black. But look, to be clear, I mean, if Anthropic or OpenAI come to market, I have no particular interest in following, except for the pop. But SpaceX, I mean, they've got proper stuff. I mean, they are legit. And forget Starlink and stuff. It's that reusable rocket, which has fundamentally changed the game. NASA is gone. NASA is over. I think it might be a SpaceX.
Yeah, I mean, we are very seriously Element going to apply our minds to investing in SpaceX, because that is blue sky. You dominate space, and you're in a whole other league.
Yeah, and I mean, folks have been buying up, what's it, Scottish Mortgage. Yeah, left, right, and center, because they hold some. I do think, and there's just a window, you know what, and maybe 27 or 28 is better, but at this, Elon Musk and the other shareholders are looking out at 2026 and thinking this is a good year to take SpaceX public and just turn it into a R1 trillion company, $1 trillion.
Yeah.
R1 trillion is not so thrilling. Cool. So that's our predictions. And then a quick wrap round from each of you. Top 40 and Rand, red or green, stronger, weaker. Mark. Yeah, Rand for record is 1639.
Oof. Yeah, I mean, absolutely. It's hard to argue top 40 anything other than green, which is a slightly scary consensus. But yeah, I think top 40 green. The Rand statistic, you look at it, it goes through strengthening periods for 2 to 3 years on average. And we're at the end of a 3-year period of a strengthening Rand. But that said, like, the fundamentals are so strong, and we're sitting at close to fair value and all. I'm going to take a contrary view, because this is a full 12 months, and I'm going to say that the Rand is going to be weaker from here.
Yeah,
it doesn't mean,
but I like
it. It doesn't mean that the Rand doesn't strengthen for about another half a year. But remember, like, we're long in the tooth in this Rand rally.
I mean, to the point. Well, that's my argument. I mean, I think we're going to, my one prediction, which I didn't use, which was rating upgrades, because I used it kind of last year. Yeah. Are we going to get are we going to get someone making us investment grade? Probably not. But we're going to get, I think, at least 2, if not 3 more this year. And I think the Rand's going to 15. Now, to be clear, it could get to 15, and then it could crash to 1650, and Keith could still be right. But we need to remember it was 1990 back in April of last year, Liberation Week. So I am green on top 40. That ties into my sense that the Resi is going to have another winner, and I'm stronger on the Rand. But Keith, someone has to take one for the team.
We will see. Listen, a lot can happen in 12 months. But
with our Rand, a lot can happen by tea time. Cool. We'll leave it there. Gents, thanks very much. We'll be back next year for number 14. Let's see how this plays out. Loads of fun. Thank you all for the time.